So give us a sense. It sounds like right now we can have our cake and eat it too.
It's great to be with you today, David. It was really interesting because what Chairman Powell said was exactly what the markets expected, right? And he said what we had been waiting for a long time with the 15 billion tapering every month. At the same time, he made it quite clear that other market expectation that, when tapering is done in July, we would probably start having the rate increases may or may not be the case. So I think in terms of eating our cake, absolutely, we can continue having growth. We can, as you said, we had the yield curve steepen. We had the markets, up 6 times in a row. That was quite exceptional. But I think what a lot of people did not maybe pay a lot of attention to is what happened over in the UK with the Bank of England, which has, I think, some relevance to what Chairman Powell may be having in mind as we get into next year. And that was the markets expected interest rates to be increased in the UK, and that did not happen this week. And a lot of people lost their shirt. And I think what Chairman Powell is saying is he does see the one condition of inflation where he expected it to be, which is more than 2%, and it is. And there are lots of conversations whether it's going to be higher or not by a lot because of the supply chain problems. But more importantly, he and I think in the past, Janet Yellen are 2 Fed chairmen who have really, really talked about not just the numbers that we see, like the ones you mentioned, the 530,000 today, which, by the way, had 200,000 women in it. And that's very important because women are starting to go back as schools are opening. But a lot of people are still sitting on the sidelines. And he talks about maximizing employment. So he's looking at it much more from a maximizing employment, looking at lots of different dots. And also, we should really watch what they're saying much more carefully. Just like I think we were surprised by UK. If you let me, I just was, reminded of a Stan Fisher quote because he gave this great lecture yesterday at MIT. And Stan, who was a former Fed vice chair, once said that central bankers it's a dangerous place to be a central banker because they can print money. But he also said central banking is something like a pointless painting. You have all those dots of data and you're trying to figure out what on earth is the picture. Yeah, and I think that is the problem. And
Afsaneh, when you talk about those people on the sidelines, it points to participation numbers, which are stubbornly not going up particularly well. But if you're an investor, it's not just the yield, it's the real yield. You have to take into account inflation. And one of the questions I have is, we had Chair Powell masterfully keep the markets nice and calm. Is that really what he wants to do? Is he going to fight inflation by doing that? Because actually financial conditions actually loosened rather than tightened when he said he would taper.
They did. And I think he will be much more careful. But again, this focus on what he has said very clearly, employment, I think, is sort of really, really up there for him. And so he will be watching inflation at the same time. But if we do think that with the supply chain problems that are there, we will have less of a problem. One, because growth rates will be lower next year in the US, in the rest of the world, in Europe, and in China. You may not have as big a problem. And so your real yield, which is what you're talking about, may actually do better because inflation may start going the other way around. So I think that's sort of the way he's implying his thinking is, and that's the way we actually think at RockCreek too.
So as a practical matter, I hear from a lot of people, it's just hard to find yield, period, because there's so much money in the marketplace at this point. We had, of course, the COP26 talks that you were very involved in over in Glasgow this week. And I wonder, as an investor, what are the opportunities there with climate? Because I hear a lot of lofty goals being announced. At the same time, I'm not exactly sure how it's translating into the real world of investing.
By the way, one point we should mention is, I think, maybe there have been others in the past I don't know about. Jay Powell may be the first Fed chairman who, before he joined the Fed in his earlier role in the Fed, was actually investing in sustainable climate-related investments. So I think it's a point that he doesn't talk about too much, but interesting. In terms of investments, I think to look at the positive, obviously there is the most important point that has been highlighted in COP26, which is finance is key. Asset allocation is key. There's so much asset sitting on the sideline right now, as you said, earning negative returns in fixed income. So if you have some, if you can move those assets to positive returns and in a sustainable economy, it will be very, very helpful to everybody. And we at RockCreek have signed up with a number of the alliances in particular. But as you said, it's not signing up and committing that matters. It's actually what you're going to do. And we saw with the Oxfam report, right now, the 1% top, most wealthy people are responsible for more than 16% of the emissions. And that number is expected to go up in the next 10, 20 years. So going back, I'm positive about opportunities. I'm really concerned it's going to be much, much slower, David, in terms of putting them into action and maybe making people think they have to get to net zero without giving them a transition plan of how you get to net zero is a big problem, which nobody is really talking about.
I guess one of my questions, Afsaneh, is, if I can put it this way, when we talk to about all this capital going into green investing, is it a push or a pull? And by that, I mean, are the opportunities so attractive that people would be idiots not to go into it? It's just so attractive. Or do they need a push, whether from governments or otherwise?
I think there is definitely a lot getting done as we speak on the technology end, creating new batteries that will have longer life, more storage, and also potentially other forms of energy. So there's that going on. And if, as we've seen, those could have very, very high rates of return. In fact, David, some of the highest return investments in the last 12 months were in venture in clean energy. So there's certainly a return perspective that we should not forget. At the same time, solar energy is very cheap now. So if you invest in transmission or development in solar, the returns are not going to be high. So the question is, so long as they're positive, is it higher than the negative returns that many, many bondholders are holding? And can the financial system create tools that allow people to go into it? So going back to your point, I think it's a pull and a push. The only thing that I have found has changed in the last year, but particularly the last few weeks around COP26, is a lot of universities and endowments have changed their tune, and they are truly looking at how they can improve the endowment management, which was very far behind in terms of climate, but also bringing in their scientists and people who are running the university operationally to see how you run a university on net zero. And David, they still are looking for answers. So I think a lot of work has to be done on implementation, not just pledges. Just very briefly here at the end, Afsaneh, can we get past energy to things like green steel and green concrete? I think there is hope. I think we will need a lot of investments going into those areas. I'm very optimistic about those areas. I've seen, some research going into it that will make it positive. So you may be asking the wrong person. Are you disappointed we didn't do away with coal? I think it's really disappointing that the US in particular did not sign up for that. And while we had a lot of smaller countries like Vietnam sign up and Indonesia sign up, you had the US not sign up. So that's, alongside, of course, China, who did not even appear at the meetings, is very, very, upsetting to the market. Yeah. We all know there's a shortage of energy as we speak, but we need to find jobs for the coal, people producing coal, and move on.